Closing statements. Plaintiff's closing statement. Society expects more than this from auditors. We expect auditors to maintain an attitude of professional skepticism in dealing with their clients. We expect auditors to take any irregularities in their clients' internal control procedures seriously, as such measures are in place to prevent fraudulent activities such as the ones that led to material misstatements in Clovatec Inc.'s financial statements. The auditor admits that they found evidence of a discrepancy in the inventory records, but the auditor dismissed it on the basis that they didn't find any other discrepancies. Did they stop to think that there may be more discrepancies in the account that they didn't even look at? Of course, the auditor relied on statistics to evaluate the potential for bigger issues in the company, but how are we to know that they made this judgment responsibly and not out of their own self-interest? Auditors are being paid to perform their services, and they have been known to downplay issues they find so that they are hired again for the next year. In conclusion, ABC CPA firm clearly did not live up to society's expectations and should be held accountable for their actions. Because of the auditor's negligent actions, the stockholders lost $100 million through their investment. Therefore, I urge you to find ABC CPA firm liable for negligent misrepresentation. I also urge you to require the auditors to compensate these stockholders for their losses and punish the auditors for not doing their job. Defendant closing statement. The plaintiff has told you that ABC CPA firm made some mistakes in its audit of the 2007 financial statements of Clovatec Inc., specifically in their evaluation of internal controls. It is now up to you to evaluate whether the actions taken by ABC CPA firm were actually negligent according to the laws and regulations established in the U.S. Is it negligent to follow commonly used judgmental procedures in determining the impact of internal control deficiencies? Is it negligent to follow reporting guidelines and only disclose internal control issues that are deemed by the auditor to be material? This is clearly not a case of negligent misrepresentation. Moreover, auditing standards require nothing more than these actions. The fact of the matter is that ABC CPA firm made a difficult decision when evaluating whether the deficiency in internal controls for tracking and recording inventory at Clovatec Inc. could create material errors in the financial statements. It is well known that auditors must rely on only a sample of transactions to determine their opinions about a company, because it would be too time-consuming and expensive for companies to have auditors to look at every single transaction that occurs within a company. The auditor collected the evidence required by audit standards and even collected additional evidence after they found the one discrepancy to make sure that they were not missing anything. It is not the auditor's fault that they could not look at every transaction. The evidence that the auditor collected clearly indicated to them at the time that there wasn't a larger issue with the account. The fact that their opinion was wrong is irrelevant. Audits cannot possibly assure that the financial statements are 100% accurate. ABC CPA firm performed an audit that complies with auditing standards. It is clear that ABC CPA firm is not liable for negligent misrepresentation. The plaintiff has failed to demonstrate otherwise. Accordingly, I urge you to find ABC CPA firm not liable for negligent misrepresentation.